What's going on, everybody? You're watching the Daily Stock Market Brief. My name is Michael Silva. Today's date is November 5th, 2020. This is the show that I do Monday through Friday. We use technical analysis to get a good idea as to where the market might be headed next. In yesterday's video, we said that we had some opportunities to run. I'm excited to talk about what's going on today and where we stand in the overall scheme of things. In today's video specifically, we're going to be looking at indices, indicators, and a couple other elements just to really get a good sense as to what to potentially expect here in the near future. So without further ado, let's just go ahead and hop in to today's episode. All right, everybody, welcome back. If you haven't done so already, I really appreciate it if you would hit that like button if you like this type of content, and even subscribe if you are new here, if you like this type of content. It is greatly appreciated, and a special thanks to all the people that always consistently come out and watch this show. I really do appreciate it. Let's hop into it right now. First off, I want to look at the sectors. Now, a couple of videos ago, we were discussing the possibilities of seeing strength in materials. And I just wanted to point out today, yes, we have been having some really good days as of recently, these big gap ups, but I just want to point out materials at the top of the list right here, up 4%, just towering over a lot of these other various sectors. Now, you might see this screen as familiar. I brought up mining companies, gold and silver mining companies, and the reason why I did that a couple episodes ago was because of the big periods of consolidation that they were within, and I said, you got to be patient, you got to wait for some strength and positive momentum. Now, the market has been acting funky, so I'm a little hesitant at this particular point in time, but what I want to call out here is these 300 plus million market cap companies, well-known companies in the mining sector. We'll look at the gold and the silver, and you can just see here we got 8% up, 7% up. This one was actually down for the day. KGC up 9%. 8.9%, 15%. Remember Helcom Mining, the one that I mentioned, and these flag positions, they look like they're about to be breaking out. So if this kind of holds, you got CDE down here, another 15% up on the day. Insane. 11% for EGO, just absolutely incredible performance. And then you have SBSW, looks like it's breaking out of a previous resistance level. AGI 9%. It's just out of this world move for these miners. So maybe this is the early stages of a breakout to higher highs, but we'll get into the indices too, just kind of because there are some there's some hesitations that I have, but the overall patterns here look like breakouts for the most part. On the silver, look at the silver miners. AG, these are 300 plus million market cap, so well-known companies, strong, up 12% for PAAS. Look at that big green bar, boom right here too. Just across the board, really nice. Now, the only thing that I'm kind of like, oh, well, what's going on really here is I'm not seeing like just this crazy amount of volume to the upside. But I'm going to be, like I said, keeping my eye on it. I would like to see a lot more volume on the breakouts, but maybe that's to come. We'll see. Let's go ahead and get into the indices, and we're going to kind of scope from a big point of view down to a smaller point of view on each of the indices. Then we'll hop into the indicators very quickly. Before we do get into the indicators, I'll tell you right now, I'm not going over many indicators today, specifically because there is no real overextensions and they're not really giving too much direction. So I don't want to read too much into it when it's not actually necessary. Here's the SPX on the weekly time frame. Just notice that the overall bigger concept pattern is this broadening wedge megaphone pattern, up 7.35% for the week. Just this monster bar that's green. It looks just like from open here to close here, just a massive bull run extended from the 5-period EMA, running into this symmetrical triangle pattern that we talked about yesterday. On the daily time frame, what I want to call out here is just gap 1, gap 2, gap 3, gap 4. Hey, that happened over here in August. That happened to be filled in September. And then we got them gaps again in October. And then we got filled into there. And then now November is creating more gaps up. So just, it's the same old story right now. It's clearly the market's uncertain. To be able to go run up like this, then come back down, run up, come back down, run up. Maybe we'll come back down, but there is still fuel in the tank for upside movement. Now, we did get rejected from this upper trend line. And remember what I said previously on other videos is sometimes if the cash market can't get above it during market hours, what happens is after hours just gaps clearly above it. And we've had so much resistance on the way up, but the market just gaps over everything, every major area, and consistently pushes higher. What I want to point out here, this is the VIX. The VIX is inverted for me right now. I just wanted to show you that we have been closing some gaps on the way up. We created a new gap right here, and we have some resistance right above us. Now, the reason why I inverted is just kind of help us, measure up to the moves of the S&P 500. So we have the resistance here on the VIX. We clearly have resistance up ahead right here. So maybe the market wants to get us higher and potentially even close this September gap that's above us. But I want to be very clear. This isn't normal market behavior. This doesn't necessarily mean it has to get filled, but a vertical move to the upside means that if it does come down, I would expect to see much more volatile movement to the downside. Remember, the stock market takes the stairs up, but it takes the elevator down. And if these are the current stairs that we're seeing right now, as you can see, this is the 30-minute time frame, little step, step, step. Just imagine what the elevator is going to be like on the way down. Now, this is the 30-minute time frame. We have negative divergence on the RSI, and we have negative divergence on the MACD. Can it go higher? Yeah, it could still go higher, but just keep in mind, like, you got to be careful here. Is it the best place to go long right now? I don't know. Everybody that's really been in this run-up are probably longer-term investors, but really what causes this type of move? Well, people that are buying into the market don't necessarily want to be buying into the market. They're probably covering their short positions, and this is what happens when you have buyers, like momentum buyers, or even people that were buying at the lower area of support. And then you have people that are covering positions. I remember hearing that there was $1 million position placed at the lower portion over here. I think it was towards the end of October, $1 million put option, betting basically that the market was going to crash. And I can assure you that put, those put options that they bought just completely obviously are getting covered, or they're just holding on to it for dear life and just getting completely obliterated on this move to the upside. Here's the Nasdaq 100. We're going to start on the weekly time frame. Nice, obviously, move to the upside, but check it out. Obviously, we're up to 9.27% for the week. Incredible move, extended pretty far from the 5 EMA, but we're also coming into this upper trend line right here. So play with caution. On the daily time frame, we are kind of actually above this low upper trend line. So maybe we're going to get that squeeze higher. It's very possible. This could very well set the stage for, more move to the upside. I would expect that if we get up higher into this 12,400, we get rejected, come back down, either fill the gaps very aggressively, because that in 3 days, that's not normal. I mean, we're from 11,100 to 12,000. We went 900 points in 3 days, and it was pretty much all just gap ups. The majority of the move was gap up. So, intraday when you're trading, it's just, back and forth kind of chop and it kind of sideways action. It hasn't been all too, great for the traders. Here's the Dow Jones, very similar kind of setup. 1, 2, 3, 4 gaps to the upside, aggressive vertical move, coming into an area of resistance, this upper trend line. Are we going to start seeing the shorts? Is this the covering that's taking place, and now are we kind of running out of steam, or is there no more gas in the tank? Well, there might be some gas in the tank still. Like I said, a lot of the indicators that I look at, they're not giving us clear direction, and on certain ones that we'll go through, still indicate that there's still room to run here. Here's the IWM. I wanted to point out another, once again, gap, moving above this previous area of resistance. So this kind of looks like, hey, no, this is a bullish breakout. However, if we look at it on a longer time frame, well, what do you know? We have a rising wedge pattern, and it's coming into a upper area, of resistance, and we have a negative divergence right there on the Russell 2000. So, maybe we're going to get up here and then come reject to get back to these lower levels. If you're going to be shorting anything in this market, I believe that the Russell 2000 is probably the more, I personally would say short the Russell over like the Nasdaq 100, because the Nasdaq 100 has just been this monster as of lately. Potentially even some scales into the SPX or the SPY, but you got to just do it at major areas, because you got to be careful with shorting regardless. Here's the KRX. This is the KBW regional banking index, which really mimics what's going on in the economy. We got held up at this resistance, got knocked down, and now we have another big bullish day today, up 4.2%. back above the 200 period moving average. I guess this pattern's still technically holding, sending triangle, little inverse head and shoulders. I just don't understand how the banks could do good. And you got to think big picture here with the banks, okay? You got to think Warren Buffett moved out of the banks, not completely, but he moved a lot of just big positioning out of the banks and went some into gold, okay? Now, why would you do that? Why would you go out of the banks? Well, first off, if you just look at yields, okay, yields, which that chart hasn't updated, so I'll probably put it on my website later, but yields have been going, they're crushed overall, okay? They're on a relative basis extremely low to where they were a year, 2 years, 3 years, 4 years ago, okay? So if the Fed wants to hold these short-term rates low and you have long-term rates that are crushed too as well, they've been kind of rising, but think about it. Banks make money by borrowing short-term and lending long-term. So if your 30-year and 10-year yields are low or going to get crushed, that takes away from the margins of the banks. So how can the banks do good in an environment where it's harder and harder to make money? Okay, you got to think about that. Here's the TLH. This is 10 to 20-year treasury bond, just an ETF. I just wanted to point out here, we saw that big crush in yields. That created this big move to the upside. But I wanted to just call out, hey, maybe we might be breaking out of here, but we're also coming into an area of resistance. Just something to note. A couple indicators. This one actually hasn't fully updated, but I forgot to talk about it yesterday, so I'll just talk about it now. 2020 is looking very similar to 2018. We've been talking about this for now probably over a month. We're coming into this upper portion of the area at 3510. I was thinking it might get hung up at 3500, but we closed above it. And now we're on a positive breath. Once this updates, I think we'll probably be at even higher positive breath. That's very similar to here. We came down, up, down, down, up, and then up. So what happened after we came up to this up? Well, we crashed down aggressively on a negative breath. So I don't know, maybe we're going to be following this to a T. We're looking at some of these other charts and they're pretty overextended. I don't know, can't call it to be, you gotta look at this as a possibility, not a probability, okay? Nothing in the markets is certain, but it's best to be prepared so you're not, sideswiped by some crazy stuff that takes place. Here's the BPNDX. This is what I mean by it has room to go. We were overextended. We were basically saying, yeah, now we can probably see a bounce. We saw the bounce, and now we're just kind of midway, 52.84. It's not overextended in either direction. So this tells me, yeah, we still have some room to go. Even when I looked at the VIX and everything like that, it just still seems like there's areas of both ways. So there's no clear direction. When I looked at put to call ratios, same thing. They're not in alignment for what I typically look for. So I'm just leaving them out of the video as of right now until there's more clarity, because I don't want to confuse anybody when it's just unnecessary. Commodities, like I've already said, gold has been taking off today. Big breakout. Yay, we got above that 1950 level. Holy moly. It's about time. Now, is it going to hold? It might hold. This could be the start of a bigger move to the upside like we've been seeing in those gold miners and gold stocks. So I'm going to start dabbling in a little bit here. Keep in mind, sometimes gold gets taken down by the equities market. So when the equity markets go into this overextended territory and then they have to, consolidate or potentially take an elevator down, it could very well potentially take gold down too. However, there's a possibility that more money just starts flowing into here. It doesn't necessarily mean that the overall markets go down. It doesn't mean that there's going to be sectors that are winning. So if the material sector is going to be that winning sector, that'd be great for gold. That'd be great for the miners. Silver right here is running into an area of resistance right at the 50-period moving average. Strong day overall, up 5.43%. Holy moly, silver. More volatile than gold, obviously, but still something great to watch out for. But keep in mind, it still has a lot of work to do. Both of the metals do. Here's Bitcoin. Bitcoin's really the shining star here, up 10.7% for the week so far. I've been monitoring this and looking at these weird trends on the daily time frame. Couldn't quite figure it out, so I was open to basically, hey, maybe it's going to pull back to 12,000, or potentially we're just going to continue to see it stay kind of very frothy RSI here and then continue to move up. Well, we got the continuation to the upside, 15,188. It wants to go retest the market high, or maybe, 17 to 20,000. It's just very strong right now. Keep in mind though, frothy. extended RSI. It's done that previous times, many times. But remember, even if it gets extended, it can hold there for a long time and it could pull back and then do it again. And as you can see, boom, 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 boom to the upside. Overall pattern looks pretty bullish. Where can it go from here? You know, I don't know. But I can assure you that typically, okay, and I'm not trying to jinx anything, but parabolic moves aren't always the greatest things towards the end. So these type of moves, you get people that sell into it. Big money can sell into it. Doesn't necessarily mean that it can't go higher, but when things go parabolic, it could very well mean the end of a move. So like, for example, it went parabolic, you know, basically from, you know, all through here. So it went for a very long period of time. Well, not really. It was only 1 year. 2017 to 2018, it went parabolic. And then it got crushed to the downside. Okay, we're going from, you know, I'd say right here, which is just March, maybe, yeah, March 2020. I would say this, it's not quite parabolic, but that's a pretty aggressive move from as low as 4,000 to 15,000. I mean, yeah, that's in a very short period of time. I'd consider that parabolic. I think that parabolic can move, it'd look more like this in my opinion, but we're starting to see that move that's very, very aggressive to the upside. I'm not too sure how high it can go, but I can assure you this, when things move up like that, they retrace very hard too as well, okay? It's just gravity, and gravity applies to the stock market as well. Let's talk about the dollar. The dollar chart didn't update either, so I just drew in a red candle because I'm really, really technical like that and professional. That's, you know, what I try to do. Really, we just got crushed to the downside on the dollar. That's why you're seeing metals perform quite well. I still think that they'll find some support here at 92 if it continues to move to the downside. But really, like I've been saying, it's either going to be a break above 95 that adds to the bulls' favor or a break below 92 that adds for the bears' favor. Till that happens, we are just in a channel, not much going on overall for the dollar other than just being pinned sideways. You got to understand where it's at right now. It was right there, you know, just going into August. So, you know, sideways action for the most part. All right, everybody, that's all I got for you on today's stock market brief. I want to let everybody know that I will be on vacation for the next couple of weeks. I'm going to try to put the videos out as I always try. But if there is a day that I miss, I'll probably let you guys know on one of my social media channels. I don't plan on missing it, but I just wanted to give you guys that heads up. All right. Thank you. Bye.